The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the SPDR S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only. It does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So here we have the daily chart for the SPY, and it looks like we're finally seeing some type of movement and higher volatility occur in the market. Previously, prices were inside of this tight range from the 386 to the 376, so that's a 10-point range the market was inside of for about 13-14 trading days. So we're seeing a little breakout occur to the top side, which is favorable for the bears because most breakouts will fail. So if we see a breakout to the top side, there's a good chance this is just to run the stops from the shorts. We'll have it right above here, and a retest of this breakout level at the 392, and then we see continuation to the downside. The reason there's a good chance that occurs versus just continuing higher is we do have a previous repeating pattern. So we had this range pattern in the past right here, and that was after a down move. So again, this range pattern occurred also after a down move. Then we had a breakout to the top side. So the prices came back to retest the breakout level, found resistance, and then we saw the continuation to downside. So that's what I think can occur right here. I think we can get the same type of repeating pattern. So we could probably double the range right here will probably take us to the 395. So that's kind of high. I think we just get rejected from the 392. I don't think we get up to the 395, but it is a possibility. It is on the target. 396 level is also there. So I'm expecting a breakout to continue or even fail right now. But if it continues, I'm expecting resistance to be found and then send prices lower, just like what we had in the past. So that's what I'm thinking can occur. Obviously we can go up, back to the 410 level if prices don't find resistance here, but I think the probability is still on the bearish side. Overall, the pattern is still down since last year, January. So this is pretty much a 1-year bear market, and it's a drawn out one, meaning, basically you're going to have crashes and stuff that are much quicker and we recover fast. But this one's already been a year, so I think most people haven't experienced this type of market in a long time. So most looks like moves down, happen, maybe several months, a couple of months. But this one's already been a year, so most people have not seen this type of market occur. So I think this is probably going to continue. I believe you can also, implement physics into this. So basically, Newton's first law of motion is an object at rest will remain at rest, and an object in motion will remain at motion unless acted on by an outside force. So what does that mean for the charts? It means that, if we're continuing in the fashion that we're currently moving in, we're probably just going to continue moving in that fashion unless, some huge catalyst occurs or we hit a level we can't get through. So very similar to we had this uptrend. See, this uptrend lasted for quite a long time, since the bottom of 2020 March all the way to January 2022. So about a few years, this trend stayed in motion, unless acted on by an outside force. 478 was the high, 479 was the high, and then we started trending lower. So I think we're going to maintain this trend, at least for the foreseeable future. And then an object at rest was right back here. So you can see that prices went sideways for about 14 trading days. But now we're getting an outside force, which is this breakout. Maybe something occurred in the market or something is coming. I believe maybe there's a CPI report coming out this week. So again, that's going to add that outside force or catalyst to drive prices around. So me personally, I think there's still higher probability to see lower prices in this market. I believe we're going to probably get this repeating pattern where we see the breakout to the top side, fails, find resistance, and continuation to the downside. So very similar to what happened back here in September. I think that's what it can occur here. Maybe not. It's all about probabilities. Am I predicting we're going to reach the 480 level tomorrow? No. So there's a very, very low probability. Am I thinking we're going to crash down to the 304 level? No, it's a very, very low probability. So now we're starting to get, at a higher probability if you get closer to your target. So example, I was looking at, the 480 for tomorrow. What about, the 420? That's probably more likely to occur than the 480. Now, what about the 390? Well, that's even more likely to occur. So it's all about probabilities and finding out what's more likely to occur. And I think what's more likely to occur is continuation of the upside, finding resistance like we did in the past, and continuation to the downside, because the market likes to do these repeating patterns. Now, I'm not going to just look at the bearish side. I mean, the market could just break this and continue higher. If it breaks and continue higher, there's a gap right here that could be filled, and probably going to test this level right here at the 410 level. So that's everything I have on the daily chart. Let's take a look at the weekly chart, so you can find anything else. And here's the weekly chart. Basically, we found resistance right over here. Continue lower, came back up, found resistance, broke through the EMA. Now we broke back below it. Now we're pretty much testing it on the bottom side. So we're about to see if it holds. If it holds, we're going to continue down. So I think we're going to hold. We could just pop up. Then we're going to probably reach the 410 level. If it holds, we're probably going to make another leg down and probably reach the 360s and probably even the 350s. So that's pretty much everything on the daily and weekly chart. I think, next week is going to be a big deciding factor, or it just depends on depends when we get to those key levels, like the 392, like I mentioned. And we'll have to wait and see if it holds or it breaks. Then, obviously the market is going to continue higher or lower from that reaction. So that's all I have for the SPY this week. And let's see if we get that pop up and that drop down. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also, share the video with your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.